We'll we've got the ITC numbers coming out. Jayesh, I'll have to button over there. We've got the numbers coming in sharply higher than what was expected. The ET now poll was throwing up a number of 1745 crores. What we have is a net profit figure of 1840 crores. So that's come in sharply higher than what was expected by the street. And in fact, if you could just pull up the ITC stock chart, that's gone. You've seen the stock gain by as much as 1%. Post the earnings announcement coming in. So what we are working with at present is the profit after tax number. We've also got the sales figure, which has come in again significantly higher than what we were expecting. We were expecting a number of close to 6,900 crores. What you have is a number closer to 7,200 crores. And on your screen, you have the stock price reacting very positively, up 1.2%.
Largely, this number would be aided by the account of the price hikes that were undertaken, as Navneet mentioned, that blended price hike. So that obviously is auguring well, and it has surpassed the street expectations of 7,146 in terms of the top line figure, and the profits also have come in significantly higher at 1840 crores. Of course, we will be keenly watching out for that margin picture. Remember, it is likely to sustain at those levels. We were talking about a level of 36.7 to 37% is what we were expecting. So we will be watching out for that margin picture. Of course, the two things that we will be also keenly looking out for when it comes to the ITC numbers would have to be the cigarette volume growth. This time around, if you are likely to see a negative number, remember it has been flat sequentially over the past on a year-on-year basis, so that number needs to be monitored clearly, as well as the EBITDA figure when it comes to the non-cigarette FMCG space. But on the face of it, a good set of numbers. Now, in terms of the cigarette volumes, we were expecting the sales to go up by close to 10 to 13%. And the volume growth, though, for the cigarette sales were likely to be flat at close to 1%. Remember, the volume for the cigarette segment will also be impacted on account of the price hikes that were taken post the change in that duty structure. An 18% price hike, blended price hike, was seen in cigarettes during the entire year. Apart from that, also, I think we have got the Adani Port numbers also, and on the face of it, it's a number of 430 crores versus 273. So keep monitoring that as well. The paper segment, the agri segment, the hotel segment, no surprises were expected there when it came to an ITC. Margins were expected to be flat when it came to the paper segment. The revenue growth also this time around was expected to be very moderate on account of the capacity constraints. The hotel business, there have been quite a few developments. Remember, just a short while ago, we had the exclusive news also that ITC is looking to buy a 26% stake in 3 properties of DB Realty. That is also going to be a strategic fit when it comes to ITC, which is certainly looking very strongly at expanding its overall hotel business. But though we're expecting the growth in the hotel business this time around to be fairly muted. We've only managed to garner those 2 numbers as of now, but let's also get in a check as to how the stock price is reacting, because remember, it was fairly muted from the word go. You didn't see too much of a reaction. It was holding up in the green, but on the back of those numbers, you saw the immediate spike up come in for an ITC, higher by 1%, although it has tempered off only marginally. Also, apart from that, in terms of the EBITDA, you were expecting a figure of 14%. 2,530 crore rupees is the expectation that we were working with, versus a figure of 2,218 last time around. Let's also quickly just get in a check and see how Adani Ports is reacting to its numbers. You've gotten a number of 430 crore rupees, so that has come in significantly higher than what the street was expecting. And remember, there was also word on the street that perhaps it would come in at 450 crores. Top line is at 698 crore rupees, bang in line with what the street was expecting. But ITC, of course, that demands all of our attention right now. You were expecting the margins also in the hotel business this time around. That was expected higher by close to 25%. Versus 19.4%. Now, the revenues for this would not include the Australia business, Accent Pharma, which was sold, in fact, just a short while ago. But in fact, let's also take a look at some of the commentary when it comes to the cigarette volume growth as well as the EBITDA margins. So you've got an ITC which is reacting very positively to its numbers this time around. Remember, these are the second quarter numbers on a standalone basis for an ITC, and all of the numbers can be compared on a year-on-year basis. Of course, we will be getting in Navneet Saluja in just a short while from now to break it down for us. Perhaps she has managed to get her hands on some of the other details that we will be keenly watching out for. FMCG losses were expected to decline on a year-on-year basis. That is what was expected in the non-cigarette FMCG segment. And this time around, EBITDA margins were likely to sustain. And we have got the EBITDA margin figure, in fact, and that has come in largely in line with what the street was expecting. 37.62%, and that is versus a figure of an ET Now poll of 36.7%. So margins also have surprised on the upside, and the stock price clearly taking very kindly to those numbers.